Hi, just the weekly update for the week ending the 18th of December. Getting lost in the months now. So let's take a look at the markets and let's see what is likely to happen for this coming week. Well, you can see we're analyzing here. The first market is the Dow Jones, and we're looking here at a weekly bar. So each vertical bar here represents 1 week's trading. And you can see last week's bar was already a bearish bar, and when I say a bearish bar, what I mean is that it closed closer to the low than it did to the high. So therefore the probabilities of it breaking on down lower was much greater than it breaking higher. And again, at the beginning of the week, you can see that we went down and the market then rallied, and the high here was the resistance area, and that high, which is at will I just bring up my data window. That high, which is a high of 17,845, is the resistance area. Now we all know what happened. The interest rates come out, the market's on a massive rally, and we can take a look at that by just looking at our daily chart. And you can see that this is what happened. The market initially went down, and then lo and behold, Monday afternoon, the market started to rally, which was quite strange because once it broke this low here, once that low there was broken, the market actually broke support, but the market rallied off that support, and again you can see Monday, Tuesday, Wednesday it made quite a substantial up move. Now the aftermath of the quarter of 1 percentage point rise in the interest rates in the US, you can see what happened both Thursday and Friday. The market did reverse quite wickedly to the downside. And this you can see very clearly here on the weekly bar. Now, you also can see, and it's quite significant here, that we're making lower highs. And lower highs should indicate that we make lower lows. Now again, this is our last confirmed vertical bar high up here. And we now, our last confirmed low is down here. So it's quite a move, but lo and behold, we've made a lower high. And to continue the downtrend, and to confirm the downtrend, it would mean making lower lows, and that low would be 15,370. That seems to be quite a distance away at this stage, considering we're trading at 17,128, and it's not going to happen. But again, it's an area that we need to keep an eye on, and you can see where the previous support came in this market, down around these lows here at 15,979 and 15,942. So there would appear to be the first area for support that we're going to see into the new year. Obviously this week there'll be a little bit of trading in this coming week on the first couple of days, but again we're going to be getting into very much into Christmas mode, holiday mode, and it will not be as strong. So let's flick over just to see in a more shorter time basis to see where we need to be. Well, what's quite significant here at this minute in time, and there might be some support, we're coming down to make a double bottom. And you can see this here, those lows there were lows of 17,138, and we're just sitting at 17,128 at the minute. So if we break through these in a bit of a rally, we may see a counter trend rally, but at this particular stage, looking at the overall picture, it would appear that any rally may and should be an opportunity from which to short this market. That is the Dow Jones. Let's take a look with MT4 to see what is happening on the FTSE, and you can see this is a chart showing our indicator displayed, and you can see where the weakness has appeared quite a distance back here, but more significantly here we have got again a similar scenario. This was last week's bar. This is a weekly chart, and we had it broke down, so it did achieve its price action objective by breaking the low, and then it rallied. But again, what has happened both on Thursday and Friday, the market has come back very strongly to the downside, and we certainly have a bearish bar in as much as we have a lower high than the previous high, we have a lower low, and we have a close that is below the mean. The only difference in this bar compared to the likes of the Dow is we have a close that is above the open, but it is still closed below the mean, which is the mid-range in this particular bar, and therefore the probabilities of breaking to the downside would be greater than breaking to the upside. And again, if we flick over the daily chart, you can see that very similar price action Monday, Tuesday, Wednesday. You can see Thursday went up higher and then retraced. And again, if you take just by analysing a single vertical bar, which is the very basics of price action, we had a bearish bar close there at 6,071, and we're trading at 6,000. So there's 70 points even trading the single vertical bar scenario, which we know there is more to trading the markets than analysing a single vertical bar, but just on a very simple methodology, you're up 70 points in the FTSE over this last 2 days. We put on an hourly chart, we can see exactly where the buying pressure turned into a neutral pressure, and again the selling pressure came in, and it came in after making lower vertical bar highs. And when it's made lower highs, we should confirm that by making lower lows, and that's exactly what we're in the process of doing at this minute in time. Let's go on and take a look at the two currency markets that we like looking at, and they are mainly cable, which is the pound dollar, and also the euro. So let's first of all look on a daily chart of the euro US dollar, and you can see this is a weekly bar, WK. Last week, as you can see per the shot here, this was a bullish bar, and again we appeared, although we were in a downtrend, there was a counter trend move, and it had the capabilities of making a decent counter trend move, because the previous highs were up here that I'd marked at 115, and again at that stage last week we were trading just at about 110 or just slightly above it. Again, you can see what's happened. The weekly price action objective was achieved because it took the weekly bar out to the upside. Last week's high was, or the week before's high was 110.41 rather, and last week we went to 110.58. But you can see what's happened. It actually has come off and it has went negative, and we've got a negative weekly bar indicating that the low of last week should be broken to the downside this week. So that's 108.01. So I would be expecting that broken to the downside. And if we flick on our 60-minute hourly chart, you can see here that we have got coming from blue and green, we're now into red and green, and at this minute in time there has a little bit of support on an hourly chart has come into the market after making like a double bottom down here. You can see exactly, so the power of double bottoms, double tops, etc. When you're trading the markets and based on price action are very, very good. But again, if this market and you're trading on a wider time frame and you're looking at a 240, which is our guidance chart below, you can see that the 240-minute chart, and I can confirm that by flicking on here, our 240-minute euro chart is red, and you can see that we went out of the blue mode, we've come back into a neutral mode, and now we're in red mode, and that is telling us that there's greater selling pressure. The sum total of selling pressures is much greater than the sum total of buying pressures, and therefore if we can amalgamate the 240 and the 60-minute and let the 60-minute chart here turn red, for those of you that have got an indicator, it could be indicating quite a decent short signal, with the objective obviously to at least take out 108.01, in other words break 108 to the downside. And again, if we take a look at our cable market, we can take a look at it. Pound dollar, you can see that the weakness in the pound dollar, we've had some real good moves in the 60-minute charts here. Admittedly, the 240-minute chart hadn't changed at this particular stage, but laterally it has, and again it's went from 150.50 down to 148.92. So again, there's 150 odd pips of open profit this week alone, just trading our indicator on the 60-minute chart in conjunction with the 240-minute chart. And again, what we'll do is we'll take a look at the daily charts on the cable market. If I can get it up here, pound dollar, yeah, and you can see exactly where we are here. Last week this was that's a daily bar, sorry, Thursday's bar was very bearish, and what we've done on Friday, which is perhaps going to give us a good opportunity for Monday's trading, is we have made an inside bar. And for those of you that know a little bit about price action, inside bars or low volatility bars can offer great opportunities for trading the markets in any particular instrument. And the direction in which the market breaks out of the inside bar, whether it breaks up or whether it breaks down, would be quite significant on this basis, because the bar before the inside bar, in other words Thursday's price action bar, is a bearish bar. and the probabilities of the market breaking to the downside rather than to the upside first are much greater. So therefore the low of Thursday's bar is a low of 148.63. We're trading at 148.92. So any counter trend rally in a short time frame chart, would like to take a look here, and that is the euro. We'll put on cable here. Any rally based on the pound dollar cable market should be used at this stage as a counter trending move, as a good shorting opportunity, because you can see that our 240 minute is red, our 60 minute is red, our daily bar is trading inside, in other words low volatility. So the market's doing one or two things. It's either consolidated these levels to go lower, or it's consolidating to go higher. But look at the previous bar. It's a bearish bar, so our objective is to break to the downside. So therefore we have a greater magnet pulling us to the downside at this particular minute in time, and that's all we can do. And remember, everyone, members or non-members, you only trade what you see in front of you. Don't listen to news, don't listen to analysts and TV, etc., etc. Trade what you see in front of you based on your methodology. And as a member of beawinningtrader.com, we have got a very strong methodology, and we've got an excellent indicator that helps the methodology very much make very accurate decisions a lot of the time. And any of you that are not members, I would certainly encourage you to come on to one of our webinars. Our next webinar is this coming Wednesday night, which will be the last webinar before Christmas. And if you wish to see, we're at 7 p.m. So I would certainly welcome you to come on to our webinar. But we will finish there. Thank you very much. As I've already said, this is the last market update before Christmas. So to all of you that are on my list, and all of you that have shown an interest to beawinningtrader.com, and to those members of you that are also watching this video, have a very Merry Christmas and a very prosperous New Year. And remember, we're only here to help make you successful in the markets, and we will do our utmost at beawinningtrader.com. So we will. So once again, thank you very much, and all the best, and have a great Christmas and peaceful Christmas. Thank you.